Uncollectible receivables include the direct write-off method and the allowance method. Direct write-off method completely removes the uncollectible receivable from the accounts receivable account, while the allowance method creates a separate account to account for the uncollectible receivables known as allowance for doubtful debts. However, both recognize the need for the account of bad debt expense. How to use the direct write-off method. To do so, we must debit bad debt expense and credit the accounts receivable account. However, to be able to use this, sales credit of total sales revenue must be under 50%. It is also good to note that it is not acceptable under the GAAP. How to write off using the allowance method. First off, we must need to know how to record bad debt expense. To do so, we debit bad debt expense and credit the allowance for doubtful debts. Then to write it off, we debit allowance for doubtful debts and credit the accounts receivable account. We do this to cover up the drop in the accounts receivable. If there was a mistake and we want to cover it, we must debit accounts receivable and credit allowance for doubtful debts, ultimately reversing the write-off. But how do we re-estimate bad debt expense? There are two ways, the percentage of sales approach and the percentage of receivables approach. The percentage of sales approach. First, we estimate the percentage of the total sales revenue, and then with $250,000 sales estimate at 4% uncollectible, bad debt expense would be $10,000. Its advantage is its simplicity, it is fair matching. Its disadvantages include no consideration for allowance for doubtful debts, conservatism rule ignored, and it may overstate assets. Percentage of receivables approach. Estimated percentage of the total receivables. However, there is one extra step. We must debit or credit based on the company's estimate of this year's accounts receivable using the T account. For example, if there was $100,000 of accounts receivable, then 10% to be estimated uncollectible. That would mean $10,000 will be recorded. However, with our extra step, we must use past results and trends to find out whether it will be more or less. Here is a debit of $1,000, meaning additional $1,000 will be uncollectible. Ultimately, bad debt expense would equal $10,000 plus $1,000, equaling $11,000. Finally, the aging of accounts receivable is the recognition that accounts receivables become less receivable over time, and we must use an aging schedule to